Hello everybody, Dwayne here from DRFX Forex Swing Trading. Now the last time we took a look at the Euro Aussie pair, we had noted that the breakout target from this consolidation had been hit. So it was no surprise that we eventually saw the market pull back and now begin to move in a period in which we could see the market move sideways with very little in terms of a trading opportunity. This is often what takes place when the target is hit when we're talking about breakouts from consolidation. Now, there are two general problems with respect to trading these types of consolidation breakouts. The first is ensuring that the signal that you're trading is the correct signal and that it will in fact lead to a breakout. Oftentimes as traders, we enter at the incorrect or a weak signal that only leads to a reversal that takes out our trade and carries us back inside of the consolidation and perhaps to break out at the other end. So this is the first obstacle that traders need to be able to solve, the first dilemma that we need to solve. And assuming that you have solved and identified the correct signal, the next step is in terms of identifying your profit target. Now, breakouts from consolidation tend to be very fast. So there's usually a very large amount of pips on offer. So this is the attraction of these types of trade setups. Now, the problem with with targets is that we can fall into the trap of holding out for more than the market is actually offering. So somebody who was probably aiming for the 66.51 target, for example, would have been caught out when the market actually reversed before that area is hit, and would have taken away any profits that he may have had. Another problem is that sometimes we want to avoid that situation and we end up coming out too early, taking a smaller number of pips than the market is actually going to give us. So that is another problem with respect to where we should actually exit when it comes to breakout from consolidation. Now this is something that I've solved because this all the problems that I mentioned before had plagued my trading over several years, and it was only in the last 2 years that I was able to pinpoint where these targets actually are when it comes to consolidation breakouts. Across the currency market, you will find that all consolidations have what they call a breakout equivalent. This is the area to which the market will break towards before we see the market pull back in response to hitting that target. So the key to trading consolidations is to be able to measure and identify what that target is. And this is what I've been able to figure out. Now, the example of the Euro Aussie is a typical example of a breakout from what I call a normal consolidation. There's a particular way to measure the breakout target for these types of consolidations, and once you're able to identify it, you're going to be able to exit the market at a point that allows you to maximize a number of pips that the market is offering while staying away from pullbacks that can take away our trading profit. An example of this took place almost exactly 1 year ago when the second trade that I took in the swing trade as part of the swing trading methodology offered was done on the Aussie Kiwi, which had a very similar setup. Here we can see that on the second trade the market presented an opportunity in which we were breaking out from a normal consolidation setup. Right here, the signal was given and the breakout equivalent target was set. So after the trade was entered, we were able to collect a small but profitable trading gain of 70 pips. Now, after exiting here, which was just below the breakout equivalent, the market pulled back very sharply, and it would have taken out my trade as well as anybody else would have entered and was still holding their trade at this area here. So this was a very clear example of the importance of accurately measuring that target, so that we're able to take as much that the market is willing to offer and avoid these headaches and the stress that comes with these types of pullbacks. So that is why it's very important to be able to measure these targets. You'll see them across the currency market, across all time frames, and the technique to measure them is applicable across all time frames, whether daily chart, weekly chart, all the way down to even the 1 minute chart. There's a particular way to measure them, and once you're able to measure them and incorporate them into your trading plan, then you're gonna be able to take advantage of these trading setups with a lot more consistency in the profits that you're able to take from them. So very important to measure that. And as you will see in the training course, the price action training course, this is one of the things that I will emphasize when it comes to trading breakouts. Identifying where to exit, how to enter, where to enter, the types of signals to take advantage of these breakouts, so that at the end of the day, you're going to be able to trade them with a lot more confidence, knowing that whenever you're trading them, the market is going to hit your target most of the time without any regret or any remorse. So take advantage of this course, take advantage of these price action techniques, and you're going to be seeing the results in your trading account.